stamp duty is more than 8 years in this country. Because this 2014 was just replacing an old law.
Yeah, Edwin, yes, there have been engagements between the Uganda Bankers Association, the umbrella organization where the different financial institutions come together to generate consensus.
So after making of payment, you're required to submit your documents to the nearest URA service center, where our customer service staff will look at your declaration. They'll look at evidence of payment of this stamp duty, and once confirmed, they'll generate barcodes, which will be affixed on your instruments.
So the insurance industry is very happy with the decision of the tribunal because it is consistent with the policy.
Hello everyone, welcome to the Tax Hub podcast, a platform where we get to discuss, engage, deliberate on topical tax issues. We break down, we simplify, and we engage you on how these topics relate to you, how they impact you. But most importantly, we also engage on areas where we believe we can suggest reforms, recommendations to better the industry, to better the practice. And joining me on episode 3 this afternoon is an esteemed panel of tax practitioners as well as industry experts. And in no particular order, the very first gentleman joining us this afternoon is a senior practitioner, Mr. Joseph Luswata. Joseph, you're very welcome to the Tax Hub podcast.
Thank you.
Thank you, Joseph. Joseph, our dear viewers would like to know who is Mr. Luswata, who is Joseph that is going to be speaking to us this afternoon.
Okay, thank you, Edwin. I'm Joseph Ruswata. I'm a partner in S&L Advocates or DLA Africa. I've been working with S&L Advocates since 2000, and I've been practicing in the Tax Appeals Tribunal since 2011. I'm qualified in the tax law, and at one point I was teaching tax law in the university. So I think I've had enough experience in this area.
Thank you very much, Joseph. Joseph brings a wealth of experience, not only in tax practice, but also the academia. Thank you very much for honoring our invitation. The other is we cannot engage and discuss anything tax without listening to the taxman. So this afternoon, we are very honored to have a representative of the Uganda Revenue Authority, and Mr. Pade Ocheng will be joining us. Pade, you're very welcome to the Tax Hub podcast.
Thank you very much, Edwin.
Thank you, Paddy. And Paddy, our viewers would like to know who is Paddy that will be speaking to us this afternoon.
Okay, a very good afternoon, viewers. My name, like already introduced by Edwin, is Pade Ocheng, and I am honored to be on the Tax Hub podcast. I work with the Uganda Revenue Authority, currently serving as the Acting Assistant Commissioner in charge of client services. I've worked at the URA in various positions for a period exceeding 15 years, and it's very delighting for me to be part of the discussion this afternoon. Thank you.
Thank you very much, Paddy. At least we get to have a balanced debate where we get to listen to also the perspective of the taxman, the Uganda Revenue Authority. Thank you very much, Paddy, for honoring our invitation. Then our last panelist is a gentleman who also joins us from the industry. It's always very good to make our discussions impactful, but also very practical. So this afternoon, we're joined by a gentleman from the banking industry. Mr. Andrew Mauso is joining us. So Andrew, you're very welcome to the Tax Hub podcast.
Thank you, Edwin. I'm happy to be here.
Thank you, Andrew, for honoring the invitation. But Andrew, our dear viewers would like to know who is Andrew that is joining and who's Andrew that will be sharing with us this afternoon.
Thank you, Edwin. Well, I work with a Stanbic Bank. I head the legal credit and recovery function in the bank. I have experience supporting banks before my journey with Stanbic Bank started. I was a practitioner. I did work representing banks in the industry, so I know a thing or two about what banking is about. Yeah.
Thank you very much, Andrew. Andrew also gets to bring a wealth of experience, not only tax, but he'll also give us a feel of what's happening in the banking space. So thank you very much, gentlemen. We're very honored to have you, and that's kind of you to make the time to engage and have pertinent discussions with our dear viewership. So, ladies and gentlemen, the discussion this afternoon centers around stamp duty. Stamp duty, as we've all seen, the Uganda Revenue Authority has picked it up. It's something of keen interest. So it was very imperative of us to just sit down, have a candid discussion, break down these concepts, a discussion around two concepts. Early this year, in January, also the public notice that the Uganda Revenue Authority issued relating to stamp duty on agreements. So we're going to break down that notice. What does it relate to? Who does it impact? How should we comply? That's a discussion we'll be having. Then later on, we shall also skip to the courtroom. Still on Valentine's Day, the taxpayer, a lucky taxpayer, received an amazing Valentine gift where the Tax Appeals Tribunal agreed with him, and that was UAP. It's also a very pertinent ruling that affects not only UAP but the broader insurance sector. And we're lucky to have the gentleman that represented UAP for the Tax Appeals Tribunal. So we shall also have a deep dive on that decision. We get to know what does this case relate to, what were the facts, what was the tribunal's ruling, but most importantly, how does this ruling affect us? How does it impact the different sectors we have out there? Then a discussion, we cannot just sit and discuss issues without having a take-home. So our take-home will be on recommendations and reforms. What are some of the areas in our stamp duty compliance that we feel can be bettered? And if we believe they are, what are some of those recommendations we can have? So that's a discussion we shall be having this afternoon. And to kick us off, I'd like to bring in Paddy. Paddy, you work with the Uganda Revenue Authority, and we saw URA out of the blue just come in and go very hard on stamp duty. So just walk us through on the basics of stamp duty. What is stamp duty? What should our dear viewer out there get to know about stamp duty? Over to you.
Okay, thank you once again, Edwin. To dive straight in, what is stamp duty? Stamp duty is a non-tax revenue that is levied on all instruments that are listed in Schedule 2 of the Stamp Duty Act 2014. So these are instruments that should be executed or received in Uganda. In the definition of stamp duty, we are talking about instruments. So it will be important for our dear viewers to understand what an instrument is. Yes, so an instrument is any document. So it includes any document that a right or liability is or purports to be created, limited, transferred, executed, extinguished, or recorded. So to just put this into a little context, I will use the example of a common instrument that I believe most viewers are familiar with. Let's look at transfer of land. Yes, so when land is transferred, there is a liability that is created on one part, and there's a right that is created on the other part. The buyer of this land has a right over use and ownership of this land. Yes, so transfer of this land from the names of the seller into the names of the buyer is an instrument that attracts stamp duty because of the right created for use of this land by the new owner. We could look at another example of, let's say, an employment contract. Yes, an employment contract, that's an agreement which attracts stamp duty at 15,000. But why is this contract an instrument? This contract is an instrument because it creates a right on the part of, let's say, the employee to a safe workspace, for example, to a salary for the services that they offer. But on the other hand, it also creates a liability because the employee has an obligation to report to work, to offer their services as assigned by the employer. So stamp duty essentially is paid on those instruments, the documents that create, that extend, that limit, that record rights or liabilities.
Thank you very much, Paddy. I think Paddy has set the ball rolling. He has clarified and given us insight on what stamp duty is and what it relates to. Yeah, Paddy, I still want to bring it to you. Earlier this year, we saw the URI issuing a public notice, particularly on stamp duty on agreements. Could you just break down for us what this public notice was relating to, who it impacts, what were the contents of this public notice?
Yeah, this public notice that we issued in January was essentially to remind our tax-paying community of the obligations for them to comply with the requirement to pay stamp duty on all instruments that have been executed or received in Uganda. Yeah. Now, the Schedule 2 of the Stamp Duty Act that I mentioned has up to 66 instruments. Our focus, though, in that public notice was on agreements or a memorandum of an agreement, which is item 5 of the 66 instruments in Schedule 2 of the Stamp Duty Act. Now, one of the reasons why we focused on that particular instrument is because of the implications that it has on the broad tax-paying community. We've had situations where agreements are drawn, agreements are executed, and our esteemed taxpayers take these agreements in courts of law. And then you find that they're not enforceable. The reason why some of these are not enforceable in courts of law is because stamp duty was not paid on these agreements. So payment of stamp duty makes these agreements or the whole list of instruments enforceable in commercial courts of law. So we realized that our taxpayers, our dear clients were getting disadvantaged. So our focus on agreements was for us to create awareness so that they do not get inconvenienced where, for example, they've gone to a court for resolution of a dispute. But also we realized that most of them would be caught on the wrong side of the law because we had started enforcing on payment of stamp duty on agreements. So we deemed it wise to sensitize the tax-paying community for them to appreciate and understand the benefits of paying stamp duty on agreements, yeah, but also for them to not be caught on the wrong side of the law should our enforcement intensify and find those that may not have complied. So it was only fair that we do the sensitization first, and then taxpayers get to appreciate the benefits of paying stamp duty on agreements, what is in it for them, but also on the flip side of things, the cost of non-compliance before we embark on the enforcement.
Thank you, Paddy. It's very good to get such insights. So I just want to bring in my learned colleague, Joseph. Joseph, we're looking at this public notice and it says agreements. Yeah, but agreements is very wide. What is an agreement? If I have a consent with a URA, is that an agreement? If I have an addendum? So where do we draw the divide? Would you just shed more clarity for us on these agreements? What exactly is covered? What is not? So that viewers can follow through.
Well, agreement is just an example of an instrument. I think the starting point is that the stamp duty is imposed on instruments. And my colleague has defined instrument to mean a document where rights or liabilities are recorded, executed, transferred, limited, extinguished, all those things. So an agreement is just an example of an instrument. You cannot know the scope of the agreement without first testing whether it's an instrument. So the agreement, the agreement is used in the Stamp Duty Act, but is not defined. What is defined is the instrument. In order for you to know whether your agreement attracts stamp duty, you need to know whether it's an instrument. So you cannot run away from the definition of instrument because the duty is imposed on instrument. An agreement is just an example of instrument. In fact, most of the instruments listed in the schedule, the 66, most of them are agreements. Let me give you an example. A lease is an agreement. A policy of insurance is an agreement. So an agreement is any recorded promise, largely between two parties, that is not any of those that are listed in the schedule. So those which are listed in the schedule, for example, don't include the following documents. For example, employment contracts, like as given. They don't include, for example, supply agreements with clients. So, for example, an engagement letter between a law firm and a client, it is not specifically there in the schedule, but it would fall under these agreements. So when I look at the definition of agreements, trying to fit it together with the definition of instrument, it looks to me like everything is covered there. The line is very thin. So the question you need to ask yourself, is a right or a liability being created by this document here? Why do parties enter into agreements? It's precisely that, to record their rights and their liabilities. It is very difficult under that definition of instrument to exclude any of the documents that are commonly used by businesses. Extremely difficult. Maybe a letter to a girlfriend may be excluded, regardless of whatever promises it makes. I think actually from that example that I've given, I think that the definition of instrument could be improved by adding the word economic. So you say an instrument is an economic document. No, so an instrument is a document that records the economic rights or liabilities or something. That would improve it, and they draw the line clearly. Otherwise, most of the documents that we engage with in our relationship as for businesses we work for would be covered. So the thin line, I don't know. Most of what we deal with would be covered. So the starting line is the meaning of instrument. So you need to look at your agreement and determine whether it fits within the definition of instruments on which the duty is imposed. Yeah.
Thank you very much, Joseph. Joseph just confirms to us that if a taxpayer, you may run, but you cannot hide. Stamp duty is there to engulf you. And I think the other important thing we're getting is, as long as it's creating a right and a liability, you're definitely being asked to comply and remit the appropriate stamp duty. So I just want to bring in Andrew. Andrew, you work with Stanbic Bank, yeah? You're a player in the financial industry, and you're one of the sectors that have been impacted vividly by this public notice. But just give us a recital, just give us context into the banking and financial institution business. How critical is this sector? Why should you even sit to discuss with a player in that industry? How critical is this sector?
Yeah. Thanks, Edwin. That's a very interesting question. Maybe I can put it like this. You look at the top 10 infrastructure projects in the country, 7 out of them are probably being funded by a financial institution, right? You look at the top 10 taxpayers in the country, it's possible maybe 3 or 4 of them are financial institutions. You look at the number of people employed by the top 3 financial institutions. They are easily over 4,000, right? That is employment income. You look at the facilities that are being, when I say facilities, I'm referring to loans that are being given to individuals, be it in government, be it in the private sector. They are getting that funding from financial institutions. So to answer your question directly, financial institutions play a critical role in the economy. In fact, one might even say they are the oil that, greases the wheels of the economy. So you cannot have an economy to write home about if the financial institutions are not robust and are not active in the economy. Yeah.
Thank you very much, Andrew. So Andrew just confirms to us that they are the big boys. They run the economy and they have a very big stake in how the state is run. So as Andrew, I still want to bring it and stick it with you. So Andrew, we see very many instruments playing in the financial institution sector. Would you just give us context into some of these instruments that are applicable directly to your sector and how stamp duty is integral in your business?
Yeah, I like the response that Joseph gave to a similar question that you asked him. If you are defining an instrument, as a document, an executed document that confers rights and creates liabilities. By that definition, virtually every document in a bank, because banks are there to do transactions, to enable business. So it would mean that every document that is involved in the business of a bank would qualify to be an instrument. And for me, I do not think there is a distinction between an agreement and an instrument. But by definition, anything creating liability, creating obligations and and rights would become an instrument stroke agreement. So whether you're looking at the form that you fill in to get an ATM card, or like an account opening form like Joseph stated, or an employment contract, or a procurement document, or an offer letter, or a mortgage deed, that is all instrument stroke agreements. So because they are conferring rights, and creating obligations. So I could argue that all documents that virtually all documents that we engage with in the context of the banking business would qualify to be instruments or agreements. Of course, there are the usual the usual instruments that everyone is accustomed to: offer letters, mortgage deeds, debentures, further charges, pledge deeds, letters of undertaking. But I think the definition under the Stamp Duty Act would encompass a wider, grouping of documents. Yeah.
Thank you, Andrew. So Andrew also just confirms the notion that stamp duty will impact everyone, stamp duty affects everyone. So I just want to bring it back to my colleague, Paddy. So Paddy, very many people are asking, who should pay the stamp duty? When is it payable? There's a supplier and a contractor. How should they pay the stamp duty? So just walk us through that journey of the compliance. Who pays it? When is it payable? How should they pay it?
Okay, thank you, Edwin, once again. Stamp duty is paid by the person who is making, drawing, or executing the instrument. Yeah. So if we take the example, I could pick from the example of documents that my colleague Andrew shared, the ones that apply to the banking industry. Yeah. If you look at, for example, the bank extending a credit facility to its customer, so there's an offer letter, there is a loan agreement. So the bank in this case draws this loan agreement. Okay, so in that case, the person drawing the loan agreement is the bank, and it's the bank that is expected to pay the stamp duty. If it's an employment contract, if we can use that as another example, it's the employer who draws or makes or executes this employment contract. So it's the employer who is required to pay the stamp duty in that instance. How is this stamp duty paid? URA has simplified its processes to make it easy and less costly for our taxpayers to comply with their tax obligations. So for stamp duty, from anywhere, a taxpayer can log into our URA website or web portal, www.ura.go.ug. Yes. So while there, we have a self-service menu on our web portal. So the taxpayer goes under stamp duty and selects the applicable instrument for which they want to pay stamp duty. Now in there, the applicable rates, which could be fixed rates or ad valorem rates, are already automatically entered into our system. So once you select an instrument that is applicable to you, the rates will be auto-populated, and you go ahead to indicate the details, for example, who the declarant is, and at the end of the day, you make a submission of your declaration. After submitting your declaration, an acknowledgement receipt will be generated and a payment registration slip as well to enable you go and make payment of the resultant stamp duty following the declaration that you made. So you now walk to any bank to go and make payment of the stamp duty. But we also have other payment options. So you could walk to a bank to make this payment, but using the payment registration number that will be generated, you can also make payment using mobile money. You can make payment using your Visa card. You can make payment using RTGS or EFT in the comfort of your home, your living room. You could even be at the beach chilling, and you make a declaration of your stamp duty as long as you have a computer and access to internet, and boom, you've made your payment. So after making of payment, you're required to submit your documents to the nearest URA service center, where our customer service staff will look at your declaration. They'll look at evidence of payment of this stamp duty, and once confirmed, they'll generate barcodes which will be affixed on your instruments, or whichever instrument that you made a declaration for. After that, a submission will be made, and a stamp duty certificate at that point can be generated by either the URS staff that is serving you, or you can also generate it at your convenience at any time in your user account as a client. So it's that simple and convenient. So I would urge our dear taxpayers to make use of the simple process that I have laid out, to make use of the platforms that we have put out there for them to comply with their obligation to declare and pay stamp duty.
Thank you, Paddy. I think Paddy has been kind enough to break down for us this compliance journey, how you undertake it, the website, proceed to any stamp duty office. Don't just stop at paying and you go back home. No, proceed and generate and obtain that stamp duty certificate. Thank you very much, Paddy. And to bring it back, my colleague Andrew. Andrew, there have been challenges around compliance with this public notice. Yeah, I just want to pick in you as a sector. What are some of the practical challenges you're faced with complying with this?
Well, so the challenges with the compliance of stamp duty is both conceptual and practical. Okay, conceptual, like I hinted on earlier, is which document will attract stamp duty. Okay, there's a conceptual issue there. Is it all documents creating rights and obligations? Is it account opening forms? Is it ATM forms? Now, one might ask, why is that a challenge? But it's a challenge because one of the Ministry of Finance's targets, I think, in 2023 was to drive financial inclusion. Okay. Now, financial inclusion has implications because what that means is you want to bring everyone into the bankable, space. You want people to have savings accounts. You want people to be able to, qualify for credit. But if the documents that allow them to do that are being, dutiable with a stamp duty, there is a challenge. And one might argue and say, but it's a small fee, but it depends who is saying it's a small fee, or it depends who is paying that fee. So there has been some level of discomfort in the financial services industry on what documents you are going to levy the stamp duty on. Another conceptual challenge, of course, is if you are looking at the amendments, the subsequent amendments to the Stamp Duty Act, there was an amendment of 2020 where instruments, right, for any loan were exempt from stamp duty. Previously, it was instruments for loans below 3 million shillings. those were exempted from stamp duty. In 2020, an amendment was created that then opened it up and said if it's an instrument for a loan, it attracts a nil, stamp duty. Of course, I'm not talking about the other stamp duty, that is, payable on transfer and, mortgages and whatnot. I'm referring to the nominal stamp duty. Now, the problem with that is that virtually 90% of the documents in a bank or that the bank executes with its customers are loan related. Okay? Whether it's a further charge, whether it's a letter of undertaking, whether it's a deed, these are documents that relate to the loan. These are supporting documents. So if we are going by the definition of an instrument, it would mean then that those documents are exempt from payment of stamp duty. Even when you look at the notice, maybe that was one of the things that were a bit confusing about the notice from the URA, the public notice from the URA, that an agreement or a memorandum of an agreement is dutiable. But as we previously heard from my colleagues, an agreement is an instrument. So the moment I qualify that agreement to be a loan-related agreement, then it would mean that it's exempt. So there's been a lot of confusion conceptually in the industry as to what document. Even before you talk about employment contracts and whatnot, just these documents that facilitate loans, there is confusion as to whether stamp duty is actually payable on those documents. So that's the conceptual challenge. Practically, the usual questions, who pays? Is it the customer, right, to the bank, or it's the bank? Because these are two parties privy to a transaction or to the instrument. So who pays? Is it the customer? But typically most of that cost, I would assume, would be passed on to the customer, the final consumer, which then feeds into what I talked about when I highlighted financial inclusion. That then affects financial inclusion, because the woman entrepreneur deep in the village who wants to borrow 400,000 shillings to sustain her tomato stall, if you are telling her to pay stamp duty on all these documents, she's going to have an issue with that. So then it affects financial inclusion. So those are the challenges that we in the financial services industry are grappling with, conceptual and practical.
Thank you very much, Andrew, for highlighting those challenges. And we hope your neighbor over there, Paddy, is taking note so they can carry some of these challenges and they see how they can mitigate them. And to bring in my learned colleague, Joseph. Joseph, so one of the concepts we've seen around stamp duty is if I don't pay stamp duty on this agreement, I might not address it in court. So there's been so many questions around the practicability, enforceability of some of these agreements for which we've not paid stamp duty. Do you want to just clarify to our dear viewers the effect of this non-payment on some of these agreements and instruments?
Well, thank you, Edwin. Contrary to what people may think, because the Stamp Duty Act is of 2014, some people may think it is new, but actually it's more than 8 years. Stamp duty is more than 8 years in this country. Because this 2014 was just replacing an old law. And it has been the standard that when you don't pay stamp duty on an instrument on which duty is payable, it's not enforceable in court. So the purpose of Stamp Duty Act is, Stamp Duty is a revenue collection act. The government is interested in collecting revenue. So the agreement is not enforceable in court, or you cannot rely on it in court, but the court should be able to give you time to go and pay. As long as you pay, then you can rely on it. But there's another problem. The act actually makes it an offense if you do not pay stamp duty. Stamp duty must be paid within 45 days of the document being executed. If you do not pay stamp duty, it's an offense. And if you are taken to court by URA, my colleagues here, they haven't been using that provision, but if they take you to court and you are convicted, you can be given a fine or you can be sentenced to imprisonment. So stamp duty must be paid within 45 days. The consequence of non-payment is one, you may not rely on the document in court, except if the court gives you permission to pay the duty, and then you can rely on the document later, or you may be convicted by a court for not paying stamp duty. I just wanted from that angle to add on what my colleagues have been discussing, who is liable to pay stamp duty. The act actually says that the person who draws, makes or executes the agreement. But in the context of banks, or the same law allows you to shift that burden to another person. So you can, so when for example the banks pass over that cost to the customer, they are doing so lawfully. The agreement allows you, the act allows you to agree that although primarily you are liable, another person will meet the cost. Then there are those instruments for which the person who is supposed to pay the tax is expressly named in the law. Take an example of a lease. The law says in the case of a lease, it is the lessee. The one who is taking the lease is the one who is liable to pay the tax. In the case of transfer of shares, it is the transferee. In the case of transfer of land, it is the transferee of the land who is supposed to pay the tax. Then there are these others where you are allowed to shift the burden as and when you can agree. Yeah.
Thank you very much, Joseph. I think Joseph has shed more light around the essence of compliance. And we all preach the compliance gospel. With tax, you need to comply because the URA is up in arms. You can no longer run, you can no longer hide. If you can run, you can't hide. So we continue to preach the gospel of compliance. I still want to bring it back to you, Joseph. Joseph, what advice would you give to those taxpayers out there who have since not complied with stamp duty remittance? The out those ends have got to realize, oh, URA might come for me. So what advice would you give to those taxpayers if they came before you seeking advice, legal advice? What would you be telling them?
The advice is to pay. They have come to me a number of times and I've said these instruments attract stamp duty. In fact, when Pade was submitting on this point, he suggested that he was feeling sorry for non-compliant taxpayers because they cannot rely on these agreements in court. But although I think the reason is different. He's interested in collecting revenue from those agreements. Rather than that, I don't think he feels sorry that they won't rely on the agreements in court. So the law is very clear on these things. We are supposed to pay stamp duty. And many clients have come to us to ask around this area of agreements. It's confusing to them. And we have tried as much as possible to define which documents that they use are covered. You have to pay. Because because the law says if you don't pay, you can be convicted. No one wants a conviction. So most times you will pay and then they won't pursue you. But if you refused, I think the URA can pursue you up to the end. And there are penalties imposed. And even then, even when you pay the penalties, doesn't mean you won't pay the stamp duty. So in addition to paying the stamp duty, you can have a conviction on your hand. Like, that's not good. So we always advise the clients and we'll continue advising them to pay stamp duty as applicable.
Thank you very much, Joseph. I think if you're a taxpayer and you don't want to listen to Paddy and the URA, at least Joseph, your legal advisor is telling you, go ahead and comply. So certainly we can't run away from it. I want to bring it back to Andrew. Andrew, yes, you play out in this critical sector, the financial institution business. Have there been any engagements by these banks with the URA, just to clarify, to seek clarity, to come clean on some of these compliance effects around the banking sector? Have there been any engagements in that regard? And if so, could you kindly just expound for our dear viewers to appreciate yourself?
Yeah. Edwin, yes, there have been engagements between the Uganda Bankers Association, the umbrella organization where the different financial institutions come together to generate consensus. So there have been engagements between the UBA and the URA. I think the stance that the UBA has taken has been one of dialogue. I'm aware that the UBA wrote a letter to to the URA in 2024 seeking clarification relating to the public notice to pay stamp duty. This public notice to pay stamp duty is not a new occurrence. I think there was one which was issued in 2023, and I think the year before then. So 2024, the UBA sought clarification from the URA, and they were basically voicing the same concerns that I have raised, that look, as financial institutions, we have no problem complying with stamp duty. It's a lawful duty which we're happy to comply with. However, it has implications. Your definition of an instrument or agreement is too wide, and it has the it will have the unintended consequence of getting into transactions that probably shouldn't. And some of those I highlighted on. For instance, if you're looking at these forms that customers use to get onboarded onto e-banking platforms, if you look at account opening forms, if you look at forms that allow you to use an ATM or Visa card. So that's the conversation. That was the tone of the conversation. And the URA, graciously responded and said that for account opening forms, for e-banking, forms, and for ATM forms, we're not saying stamp duty should be paid on those. We're simply saying stamp duty should be paid on all the other agreements, which is a welcome clarification, but it still doesn't take away that conceptual issue of what exactly an instrument is, where does it start and where does it end. So I think engagements are ongoing for the URA to create some form of clarification. It should be possible to have a black and white scenario when it comes to some of these things. Yeah.
Thank you very much, Andrew. And I think it's good to hear that, there have been engagements at a deeper level, at a sectoral level, and we're seeing the URA coming here to heed to some of these suggestions, some of these demands by critical sector. I just want to bring it back to Paddy. Paddy, another misconception around stamp duty has been the registration fees paid at URSBE. Someone will tell you, on that document, I registered it to with the URSBE. I don't need to pay stamp duty. So do you mind just clarifying to our dear viewers out those ends, the distinct between these two?
Thank you. But maybe if you can just allow me just about 30 seconds to add something small to what my colleague Joseph shared regarding the penalties around non-compliance with stamp duty. We've had questions asked and some opinions generated in the public. Some were generated in the legal fraternity. Some were saying, okay, this is how I will cleverly go around payment of this stamp duty. So some thought that they can choose to not pay the stamp duty and only pay it when, say, they're going to court. Because as you will know, not every matter eventually ends up in court. Someone was like, okay, if I execute 100 agreements, I'll choose not to pay the stamp duty. Yes, so on that bad day, maybe I have to go to court on a matter that relates to maybe one or two of the 100 agreements. That's when I'll go and pay the stamp duty. And then that way I have a clever way around not paying stamp duty on the other 98 agreements that were executed. Yeah, but like our counsel put it very clearly, non-payment of stamp duty is an offense. It's an offense that attracts a penalty of 2 million Uganda shillings per instrument that is executed where stamp duty was duly payable. Yeah, so whoever was thinking that they can find ways of circumventing payment of this stamp duty, I would like to warn against any such seemingly clever schemes, because the URA will come and catch up with you. And in addition to payment of the stamp duty that is expected to be paid on that instrument, you pay a hefty 2 million Uganda shillings in penalty, but you also risk being imprisoned, like Council mentioned. So again, I would like to emphasize stamp duty is paid within 45 days of execution of an instrument, if that instrument is executed in Uganda, and within 30 days from the time that instrument is received in Uganda for those that were executed outside of Uganda. So please comply with those statutory requirements, comply with the statutory timelines to avoid payment of the hefty penalties and risk imprisonment. In addition, of course, to the benefit of paying this that is in it for you, the inconvenience of having your documents not legally enforceable. And now that said, Edwin, allow me to shed some light on the difference between the fees that are paid at URSBE and stamp duty, just for the benefit of our viewers. And to answer that question, Edwin, I will give an example of increase in shares, or the value of shares in a company. Now, this is administered by the Uganda Registration Services Bureau, because when a company is registered, you register it with a certain number of shares and a certain value of the shares or the shareholding, for which you pay stamp duty at 0.5% of that value. Now, in addition to the 0.5% that you pay for the stamp duty, you also pay registration fees to URSBE of 1.5% of that same value. Yes, but maybe to highlight how URA values collaborative engagements and stakeholder relationships. We work with different stakeholders. We work with banks. Andrew mentioned the Uganda Bankers Association. We have the Uganda Insurance Association. I think we'll be discussing that later on this podcast. We have the Uganda Registration Services Bureau. We have insurance companies. So some of these are paid as a package at the institution where this service is being provided. And then we do our split between the stamp duty and the registration fees in the case of URSBE back end. So yes, once you pay for increase in your share capital or creation of that share capital when you're incorporating a company at the Uganda Registration Services Bureau, the amount that you pay includes the stamp duty at 0.5% of the value of the shares, and also 1.5% being the registration fees, which is ONTR for the Uganda Registration Services Bureau.
Thank you very much, Paddy. I think Paddy has been elaborate enough to break down for us these concepts, but also speak to the collaborative arrangements URA has with these other third parties. But I think, as we listen to Paddy, the cost of non-compliance is a very hefty one. You don't want to pay that. So it's easier paying the right stamp duty as opposed to URA having you, you'll have to hire Joseph to represent you in court, yet ultimately you're still going to pay. So we continue to preach the gospel of compliance. Stamp duty compliance doesn't come at will. So I just want to bring in Joseph. Joseph, we saw a client, we saw a player in the insurance industry come in and contest URA's understanding of the appropriate stamp duty to be applied in the industry, in that sector. So we just want to pick in your mind on the case of UAP versus URA. Being that you're the lawyer that represented UAP before the Tax Appeals Tribunal, and you got a very a positive judgment. Firstly, congratulations on that. Okay. And our dear viewers would like to be in the know. Could you just clarify, could you just walk us through this wonderful decision? What were the facts? Where was URA coming from? What were the issues in contention?
So the issues in contention was whether, basically there was, they went and reviewed the register premium for UAP and picked on medical policies So medical policies, the nature of medical policies, most of them are taken out by employers, as we know. And they are covering employees. Sometimes the cover extends to spouses and sometimes to children. So the policy of a medical insurance policy is one of those policies whose beneficiaries can change anytime. If you have covered spouses and you're covering children, they are bearing children, employees are resigning, employees are joining. So that's the nature of the medical policy. So the URA determined that the stamp duty payable is the number of beneficiaries covered by the policy. The insurance said no, the policy is between me and the employer, S&L Advocates, and the stamp duty is paid on the policy. Because the law says stamp duty is payable on a policy of insurance. URA on the other side is saying the policy of insurance has 100 beneficiaries, so each one of them is a policy. And therefore, stamp duty is payable, so that would mean 35 million being paid instead of 35,000. The second point URA brought about is what is called an endorsement. In the insurance industry, an endorsement means anything that alters the terms of the policy. An endorsement, the particular endorsement that was in issue in this case was when employees leave the policyholder, there's an amendment that is made to remove that employee who was left. When an employee joins along the way during the life of the policy, there's an amendment that is made to bring the employee under cover. So the argument was that those amendments to remove beneficiaries or to add beneficiaries also attract stamp duty as endorsements. So the case went to the tribunal, and the tribunal ruled that the medical policy is one, and stamp duty is payable on the medical policy alone, not on the number of beneficiaries covered by that policy. And secondly, an endorsement which is intended to remove or add a beneficiary does not attract stamp duty. So that was the decision of the tribunal, arising out of the contention by URA that in a medical policy which is covering more than one person, the policy is the beneficiary. Yes. So those were the facts.
Thank you very much, Joseph. I think that's a very wonderful ruling. We get to clarify how far and how wide stamp duty can go. But also importantly, that was something that relates to all of us. All of us have employers. All of us get insurance from our different employers. So we just need to clarify it, and I think it was good of the tribunal just to shed light and also come in very clean on where does the stamp duty start and end and where is it payable. But Joseph, I still want to pick in from you. That was a ruling that UAP obtained, but could you just give us context? How fundamental is this ruling across the insurance sector? But also, is it just people in the insurance sector who get to enjoy this amazing ruling, or does it also affect any other sectors out there?
The insurance sectors welcome the ruling actually, because if you look at the statistics, what they call insurance penetration in Uganda, in East Africa, but basically in Uganda is very low. There are many reasons why it is low, and therefore, if you are to increase the costs of insurance by imposing stamp duty per person, you would affect the penetration. So the insurance industry is very happy with the decision of the tribunal, because it is consistent with the policy objectives of promoting insurance coverage among Ugandans. So the idea that you are covering 1,000 employees and each one will pay an insurance policy would make insurance very expensive, and therefore many people will opt out of it. Already they have not been in it if you increase the cost. So the insurance industry is happy about it. There are many other beneficiaries. I just learned along the way, for example, microfinance institutions, they have a product called group loans. They lend for a group. They lend money to a group. You can be a group of 30 people who have come to borrow money from a microfinance. Those loans are insured. So the insurance policy is taken out by the microfinance to cover events happening on any of the borrowers. So the stamp duty paid is 35 shillings, 35,000. But if the argument of URA was to prevail, the stamp duty payable would be 900,000. But you're lending into small borrowers. Banks also. These loans that we take are insured. And one policy is taken out, say, for a category of borrowers, and stamp duty is paid at 35,000. When you go back to the insurance industry, it's not only medical policies that are group in nature. There are many others. Professional indemnity, as an example. Professional indemnity policy premium is very high because the professionals are dealing with big transactions. So if you add on the cost of stamp duty by arguing that all the professionals in an organization must pay stamp duty, is a problem. There's another group policy is workers' compensation. Workers' compensation can be as big as medical policy because every work is covered by law. There is another one, I think group accident, which is even wider than workers' compensation. So the decision, as I said, is welcome and is affecting more than the industry of insurance, banks inclusive.
Thank you very much, Joseph, for that deeper insight. And we hope that happiness is not short-lived. So just to confirm, has the URA appealed this decision?
The URA has appealed the decision. They were basically unhappy with what we call an obiter comment by the tribunal. The tribunal made a sweeping statement within the judgment, within the ruling, that endorsements to change the terms of the policy do not attract stamp duty. But that general statement should be read in context, because the case put forward by UAP was that endorsements to remove or add beneficiaries do not attract stamp duty. But when the tribunal comes and makes a general statement that amendments to policies of insurance do not attract stamp duty, that unseats the URA. So there's need to reassure the URA that that general statement should be read in context. Doesn't apply as generally as it suggests. So they have appealed. I believe that's the reason they have appealed, and I think we will continue engaging them to see that they comply with the decision of the tribunal and move on from the appeal, because that I have not seen the appeal, but I know that they have appealed, and I know from my interaction with them that that's their discomfort. Yes.
Thank you very much, Joseph. And I think once again, congratulations to the SNL team as well as the Katende, Sempe, and company advocates. I think you jointly handled. So congratulations to you, gentlemen, on the groundbreaking decision. And I think we'll agree, Joseph has broken down and given us practical insights on how it does not impact not only the insurance sector, but across board. And I just want to bring in Andrew. Andrew, Joseph and his team got us a wonderful ruling from the Tax Appeals Tribunal. Are you part of the people celebrating? How does this ruling impact your sector?
Yeah. And I was, when I was congratulating Joseph, I was, telling him that the decision that he secured is welcome, in the banking fraternity for two reasons. One, employees in the banking sector also consume, medical insurance products. And if URA had its way and stamp duty was, applied on each of the policies of, say, the 1,000 employees, it will be very problematic. But I also, when I looked at the decision, I loved the obiter where the tribunal, put medical insurance into context. When it remarked and said that we have our medical infrastructure is ailing, so there is a need for citizens to take benefit of medical insurance. So if medical insurance is made expensive to these some people who are not able to get these services in the conventional facilities, you are making their plight even worse. That analogy would also apply to the banking industry, where some of these facilities, we have categories of facilities that are insured as a group. Okay, typically these are unsecured. facilities, which are usually issued against total permanent disability or death, so instead of the bank going after your estate, if a portion of that loan can be insured, against death, it goes a long way in easing the pain of someone who has lost a breadwinner. So some of these loans are then insured as a group, okay, with the bank being the beneficiary of that policy. So then the insurance company would pay the bank and settle the facility. So if the URA had the decision in their favor, it would mean that these individual borrowers would then have to pay stamp duty on all those policies, because ultimately the individual borrower takes the burden of paying the stamp duty, because it will be passed on to the borrower. So to the extent that the tribunal has said that it's one policy, one group policy, and stamp duty is paid on that one group policy, it is good for financial inclusion, because then it will make these products affordable for most of the borrowers out there. So it's a welcome decision, and I hope the URA will reconsider and not appeal it.
Thank you very much, Andrew. Certainly, Andrew is celebrating, Joseph is celebrating, the taxpayers are celebrating. I don't know if Pade is celebrating as well. But Pade, just want to bring you in. Any feedback to our viewers in light of this decision?
All right. Thank you so much, Edwin. First, I would like to appreciate Joseph for breaking down the contents of the ruling to our viewers, and congratulate him as well. Yeah, congratulations to Joseph and the team. Maybe just to add something critical to that ruling regarding endorsements. Yeah, so there was also clarity provided by the tribunal on what we call renewal endorsements. So the endorsements that do not attract stamp duty are those, from the ruling, are those where there's an addition or a removal from the list of beneficiaries. Yeah, but endorsements that involve renewal or extension of a policy attract stamp duty. Typically, these policies run for a period of 12 months. So after 12 months, there's a renewal or an extension, which involves payment of a premium. Yeah, and the ruling was to the effect that endorsements involving renewal or extension attract stamp duty. So I thought that's also an important part to add to for our viewers to understand exactly the context of this ruling. But the question of whether URA is happy with the ruling or not, let me approach it this way. I mentioned that we work with very many stakeholders. In this particular aspect, we are working with the Uganda Insurance Association. Following this ruling, we've already had engagements. So we've had engagements, and the purpose of these engagements is to try and clarify some of these areas that could be ambiguous, some of the issues, the conceptual issues that Andrew referred to, so that there's clarity from both the side of URA and the insurance industry as to what attracts stamp duty, who pays stamp duty. So those engagements are already ongoing. I believe they will yield a lot more meaningful outcomes. Yeah. The appeal, we're still weighing our options. Yeah, but we also take cognizance of some of the issues that were raised in that ruling in the obita. We are very aware that URA doesn't operate in a vacuum. Whatever we do needs in some way to feed into the broader direction of the policies of government. We have the Vision 2040 that is very specific in increasing the number of Ugandans that are covered under medical insurance. So, in cognizance of all of that, and very rightly mentioned by the tribunal in the obita, probably after assessing the different options, it could be a total win for Joseph and the taxpaying community out there. Yeah.
Thank you very much, Paddy. I think Paddy confirms that the URA certainly engages different taxpayers, different sectors, and you hope your engagements sum up to a very formidable decision. Or in the sad event the appeal is maintained, we trust and we hope the High Court gets to clarify and come very clean on some of these aspects that the tribunal ruled on. But gentlemen, at the Tax Hub podcast, we broaden the debate. We make the discussion bigger. And one area that we're very big on is we suggest reforms, we make recommendations. The laws are there, but certainly the gray areas, the compliance is there, the gray areas. So we just want to pick on your vast experience, your rich minds. We just want to pick on something. What are some of those gray areas? What are some of the one, two things that each of you would suggest around stamp duty compliance to make it better, to make compliance better, to make the practice better? And I'll just want to take the same order in which we're seated. So, Mr. Joseph, you mind going first?
I think I mentioned one area. I thought that the definition of instrument would be better improved if it was accompanied with the word economic. So the definition of an instrument is defined as a document by which rights and liabilities. I would have added the word economic rights before the word rights liabilities, so that we now know exactly which documents they are targeting. Because when you look at the list of those instruments in section 64, they are all economic documents, do with business transactions. So yes, so that would help to clarify the issue of agreements. Which agreements are covered? That is one area that I would request, that I would propose for change in the Stamp Duty Act.
Thank you very much. I think, let me bring in Andrew first. Paddy will come in last. So Andrew, you come from a very critical sector in the Ugandan economy. Are there any areas that you as a practitioner, you as a sector believe deserve amendment, deserve reform? What are those?
Yeah. Well, to resolve the conceptual issues that I hinted on earlier, whereas I agree that the definition of instrument and agreement should be clarified, like Joseph has stated, I would want them to be clarified for different reasons. Let me give you an example. The amendment to the Stamp Duty Act provides that an agreement, and I think that's item 5, an agreement and the memorandum of an agreement attracts stamp duty of 15,000 shillings. The same act provides that an instrument for a loan is exempt, doesn't pay, doesn't attract stamp duty. Now, if you look at a loan agreement or an offer letter, if I'm to take the definition of agreement or memorandum, it would attract duty of 15,000. If I'm to take the definition of an instrument for a loan, and you can agree with me that a loan agreement is such an instrument for a loan. If I'm to take that definition, then it will be exempt. That is confusion. So on one hand, and you see, if you are to get into the specifics of what should take the day, clearly the specific definition of the instrument would take the day over agreement, okay, which is maybe more general. So when UR issues the public notice saying that no, all agreements, you should attract stamp duty, it contradicts the amendment to the Stamp Duty Act. The banking industry has no interest in not complying with the law. In fact, it has every interest to comply with the law, but there has to be clarity. There has to be clarity. So that clarity can be provided. But that clarity shouldn't be provided in a vacuum. It should be provided in the context of financial inclusion. That stamp duty might seem, nominal, but it's not nominal to very many people. If you look at the quality of, people, in the banking sector, majority of them are not big players. Majority of them are, and we are pushing them away. We're pushing them into the unbanked population, which actually, interestingly, affects the efforts of the URA to have a taxable base, because the more you push people away from a formal sector where they don't have accounts, where they're not taking credit from banks, it becomes difficult. They are going to take credit from money lenders or other, informal lenders. Those informal lenders, I do not know whether they will have the infrastructure that then URA can use to reach these taxpayers. But and so that is from the industry perspective. There is need for clarity, but the clarity has to be provided in the context of the need for financial inclusion. Maybe from a more general position, in my view, stamp duty, interestingly, I learned that stamp duty originated from Netherlands, but then became very popular in the UK. And I'm told that in the UK, stamp duty was one of the ways they raised money for warfare. Okay, but if you look at and the reason I'm referencing the UK is because that's where most of our laws are derived. At least the concepts of the laws. They have moved away from this very wide application of stamp duty. They have restricted it to high value transactions, transfer of, shares of at a particular amount, transfers in land parcels of a particular amount. So I think, I know the URA wants to generate revenue, but I think they can restrict, maybe they should do an assessment and see whether they derive more benefit from going after low value transactions or high value transactions. So I think one of the proposals I would have is that stamp duty should be restricted to high value transactions, easily definable, and then leave the informal sector, the people who are, just trying to make a living, the people who want to attract to the bankable population, to be able to do their transactions without the burden of stamp duty. So I think generally those would be my proposals around the issue of stamp duty.
Thank you very much, Andrew. Andrew raises very insightful recommendations and policy considerations that we should have when engaging stamp duty. So I want to bring in Paddy. Paddy, you coming from the Uganda Revenue Authority. On your end, are there any areas you also believe should be amended, should be reformed? If so, what are those areas to improve stamp duty compliance?
Thank you so much, Edwin. I think one straightforward one that I will agree with my co-panelists is the one that clarifies on the definition of what an agreement is, what an instrument is, because as it is now, it seems to cover almost everything. And I think probably that wasn't the intention of the lawmaker. So for me, clarity in the definition, scoping the definition would be a good move, and it's one of the proposals that I would make. But then the other that I would make would be reinstatement of stamp duty on some of the instruments relating to borrowings in the bank. Andrew mentioned the tax policy changes that happened in 2020, and I think others happened in 2022. But then, if you recall, the reason why those amendments were made was some kind of COVID relief measure. My understanding is that 4 or 5 years down the road, we've stabilized a little bit. So reinstating them, for me, I think would be a good move to generate a little more revenue for our country, looking at the things that are happening around us and where, as a country, our dependence on locally generated revenue has increased. We've had donor funding withdrawals and the like. So I think it's one that we can consider to boost our channels of revenue mobilization. And I would still make a recommendation at an ad valorem rate, because then we have a balance between driving financial inclusion and also mobilizing revenue for national development. Because if it's reinstated, that's 0.5% of the loan value. If we take the example of a woman in the village who operates a stall, a charcoal stall, and they want to borrow 400,000. So 0.5% of 400,000 is 2,000. I think the balance of this borrower paying 2,000 to contribute to domestic revenue mobilization, the 2,000 might not be very limiting to having them in the financial space as a means of driving financial inclusion. So I feel ad valorem rates that are applied on the value of the loans may not have a very dire effect on a very negative impact on the drive for financial inclusion, and yet there will be some contribution towards generating revenue for national development in the wake of the donor funding withdrawals and the situation that we find ourselves in as a country. So reinstatement of a stamp duty on instruments around loans and bank transactions, I think would be a good move, considering that we are out of the COVID period. Thank you.
Thank you very much, Paddy. Paddy also makes equally insightful recommendations. And we believe the policymakers out there, the Ministry of Finance, the lawmakers, we believe you are watching, you are listening, you're paying regard to the insights, the recommendations being made. And certainly we hope there will be reform around some of these gray areas to ensure and to guarantee compliance. The taxpayers are willing to comply. All we're asking for is, can some of these gray areas be clarified and amended? So, ladies and gentlemen, the debate over here will be coming to an end, but certainly the debate has just been set truly. We're carrying on the debate, we're carrying on the engagements to see to it that there is compliance, to see to it that there is clarity in the law, and to see to it that sectors like the banking and financial institution business grows, as well as the taxpayers out there also partake of the stamp duty compliance. And we are very much grateful to our dear panelists. And firstly, Joseph Luswata. Joseph, we are very, very grateful for making the time to share your vast experience. You're a very busy man, by the time you could make the time to attend, we don't take that lightly. We're very grateful to you and the SIL team. Thank you for making the time to share your wonderful insights.
Thank you, Dave.
Thank you. To my colleague, Andrew, you're equally very busy, very critical sector, but you made the time to come and give us wonderful insights, give us a practical feel of what's happening in this banking space. So we're equally very, very grateful to Andrew. Andrew Mauso comes from Stanbic Bank. So to Andrew and the Stanbic Bank team, we're equally very grateful for attending and sharing perspective on the Tax Up podcast.
Thank you. Thank you.
And lastly, to my good friend Paddy. Paddy, you've been kind enough to make the time also come in and juggle and fight off these two main, very, very formidable discussions. But you with Studio Ground, you gave us practical feel, but you also gave us perspective on what the URA is thinking. And you've just confirmed to us that the URA is not as hard as we think. You're very welcoming. You're making different engagements at different fora. We are grateful for that. So to Paddy and our friends at the Tower, at the URA, we are equally very grateful. And Paddy, thank you for making the time to attend the Tax Up podcast.
You're most welcome.
Ladies and gentlemen, the discussion on episode 3 comes to an end. But do not forget to subscribe to our YouTube channel, the Tax Hub UG. Like, share. The debate is growing. The Tax Hub podcast will continue to bring you these practical discussions, impactful, pertinent, timely, and we continue to contribute to the tax space where we break down, simplify, and amplify the tax debate. Thank you. My name has been Edwin Echiba. Very honored and privileged to have been your host this afternoon. Episode 4 is in the offing. Look out for our channel, follow, and we shall be bringing you interesting discussions on episode 4. Thank you. Have a good afternoon.